I am honored to be speaking with Collin Plume, who is the CEO of Noble Gold Investments. Collin Plume, welcome back, my friend.
Thank you for having me. Exciting to be here. So much happening in the news. So excited to dive in a little bit and see if we can make any sense of this.
Let us start, please. Let me just start off with something. There was a fascinating new take on girl power. You and I were just talking before about this, how
Right.
when lay people try to look at something, oh, Taylor Swift and Barbiezilla or Barbie Ham, whatever the hell that's called.
Right.
And they will try to extrapolate and opine. What's your take on that, sir?
Well, I think that there's a lot of talk about Taylor Swift and how much she's accumulated or made over this concert series that she's been doing. And, people are saying that the economy is back. But, I think when you really dive into what's happening, yes, when Taylor Swift is going into a city, there are people that are benefiting from the concert. There's the people working in the venue. There's the hotels around it. There's, the taxi driver. There's a lot of people that are benefiting. But the people that are going to these concerts are paying an outrageous price. And, I've talked to people that can't afford, but their daughter said they have to go. So yeah, you have some of the benefits of the economy in those areas going up, but you have the majority of the money going to one person or her crew, whoever's benefiting from it. So that person's getting substantially more wealthy. And then there's a lot of people that are just living beyond their means, trying to keep up with the Joneses. I've talked to people that, they have 12-year-old girls and because their friends are going, they feel like they have to go. And we're talking about ticket prices that are $1,000 on the low end, $1,000. And so I think that this idea that this is helping the economy, in my belief, it's really not. It's sort of like a fool's gold in a way to believe that it's really helping the economy. It's really people are spending more on discretionary. A lot of the money is going to one person. And so I don't fall victim to this girl power movement that it's truly helping the economy. Barbie's different. I mean, whatever you take on it, getting people back in the movie theaters, I think a lot of people, especially with the strike going on, getting people out and, spending $20 on a movie ticket that's different, right? And Oppenheimer is also doing that. These two great movies hopefully will revive someone that loves movies, hopefully will revive this, genre of people going to theaters. But to say that these things are really going to have a huge impact on the economy, I doubt that it is. So, it's just kind of silly to see a lot of this talk about, these ideas improving the economy. So, it's really divided. You have, this administration, Biden, saying everything's getting better, employment's low. But then if you really read into a lot of things happening with money and debt and things happening, under the surface, things don't look as rosy as the picture they're trying to paint, in my opinion.
As a layperson, I noticed the other day, my wife and I were at various airports, JFK and LaGuardia, and they were packed, absolutely packed with people. So that means people are flying. When we go to malls, I'll tell you what, I was looking at, I'm not endorsing it, but the Cheesecake Factory, packed. This is not a cheap place either. No. People are also, my wife taught me this. She says, look to see who's carrying bags. Don't look at people walking around.
Right.
And there were folks at high-end stores waiting to get in. So there's some kind of an economy somewhere. How do I, as a layperson, interpret that?
Well, I think the scary part about that is one of the things that I would say is that you look at every crisis as a positive. And during COVID, one of the things that really happened is that credit card debt dropped by almost 80%, probably the most it's dropped. I think they said in like 30, 40 years. Credit card debt is on the rise again. And I think that's the sort of false hope about this low unemployment number. And also the equity markets kind of moving up, as people are starting to feel a little rich again in some kind of areas. But, really a lot of the jobs that would allow people to afford a high discretionary income, those jobs have been let go this year. A lot of six-figure jobs this year have gone away from a lot of big tech companies, a lot of corporations. The largest, one of the indicators of the economy is trucking. One of the largest trucking companies in the country, Yellow, is on the brink of bankruptcy. And so, and that's usually a sign, trucking is usually an indicator of a strong economy. That means goods are moving, things are happening. But this trucking company that's been around, I think 100 years is struggling and having to lay off people. Bank of America is extremely concerned about what's going on. They've been talking a lot about gold. They think gold is a great asset to own, but they're concerned about corporate debt and also this massive commercial real estate bubble that will burst. And I think they will, the Fed talks about a soft landing. I do believe they're going to lower interest rates this year to soften that commercial real estate bubble. I think it's not their mandate, but I think if they don't lower interest rates, the amount of foreclosures, the amount of properties that will hit the market will be astronomical at the end of this year and early next year. So I do think that they're gonna have to lower rates to soften the blow for the banks, basically. Not to help anybody else, but just really to help the banks. So we don't see a massive amount of these banks go out of business. But the truth in what's happening in the economy is that we've had a little bit of an equity push, but I don't think people feel confident in this equity push, the equity markets that we've been seeing, because you don't have your typical indicators. Not like GDP growth is that strong. It's not like the economy is feeling that great. There's been a lot of massive layoffs. So it does seem like a strange place to be in. We're not in a typical recession, but a lot of the major corporations don't feel comfortable with hiring, and they're doing more layoffs, and they're not aggressively spending, which is what you would see in a typical growth type economy.
How else do you look, Collin Plume, at, for example, and without being overtly political, that's not the purpose of this, but looking at the current administration, border collapse, crime on the rise, a sense of dissatisfaction. There's also what I find very interesting. There are indicators that have been suppressed. This is my opinion now, but I'm seeing certain factors being suppressed by the press, including large numbers and swaths of younger people who are embracing more of a, for lack of a better word, a conservative outlook, a more practical outlook, a dollars and cents, meat and potatoes, practical look, as opposed to more idealistic, fine. But what I'm trying to say is I see a drastic shift in not only the economy, but the attitude of America. And this coming election is going to be like none we've ever seen. Your thoughts?
I think, not to get too political, but I do think that kids that are in college today are sort of, their eyes are more open to what's going to happen after they leave college. And I think there's a younger conservative movement that's really happening, because at the end of the day, when you think of a conservative movement, it could just be fiscally conservative, right? That could be, and so for anyone that's 18 to 22 in college today, they are looking harder at the return on investment in college and saying to themselves, yes, I'm here to get educated. I'm here to expand my mind. I'm here to learn things I wouldn't learn in maybe typically a day-to-day job. But also, I also have to think about the degree that I'm getting into. I can't just take a degree that is so theoretical. It's probably important that I take a degree that's going to actually get me to a six-figure income or higher income faster,
right?
Because I'm riding a wave of debt that I'm going to have to pay off. So I agree with you. Yeah, I think there's a big change happening, and I think that people coming out into the workforce today are thinking about really being, as you said, more realistic. And then I think the gig economy, the ability for people and everybody, is sort of using someone in the gig economy to some extent. You're hiring, whether you're getting food delivered or Uber, or, as a business owner, from time to time, maybe we hire a graphic designer. There's all these gig jobs that are readily available. I mean, literally, for anyone that says they can't make any money in today's economy, go to Upworks, go to Fiverr, go to these websites. You can hire, there's people that are doing jobs that, maybe you and I aren't good at. Maybe you and I are great communicators, but maybe on the technical side of setting up a CRM or an email drip or something to that, maybe that's not our wheelhouse. Well, there's people out there that specialize that and do that for you. And they're getting money, they're making money. So they may have a main 9-to-5 job, and then at night they're doing these other gigs. That's a real concept that's going to help people get to the next step in their lives, because I think people are realizing today they're not going to stay in that same 9-to-5 job for 20 years. They're going to move around a lot, and it's important for them to be really focused on that, and even to go deeper into that on the retirement side, which is really what we do. On the precious metals, gold IRA side. I don't know if you're aware of this, but there's 20. They did a study May of 2023. There's 29 million old 401ks that have been left dormant in the United States as of right now, just a few months ago, which equals that 29 million in accounts equals $1.65 trillion.
What do you mean dormant?
Dormant. So people have left, people are job to job to job to job. So people now have forgot about these accounts. They're not even thinking. And so there is just free money out there. And we help people find it. People call us and they go, hey, I worked at Anheuser-Busch, or, that's a bad example, but, Starbucks or one of these. And
I know what you're thinking.
Well, it was on the top of my mind. I think.
Can I just stop you just one second, just for a second? There has been. I'm fascinated by how the name of something can be so connected. I was Anheuser-Busch, Budweiser, the king of beers, Clydesdales. Right. I had a friend of mine one time who worked for Anheuser-Busch. He said, look at these Budweiser commercials. He said, there's one thing you'll never see in a Budweiser commercial. I said, what? He said, beer. It's nothing about beer. It's about, volleyballs and girls and this. Yeah. So anyway, I'm driving back through Jersey and I come across this Newark bottler for Anheuser-Busch. And I thought, wait a minute. There was a commercial years ago called Shinola. It was a shoe polish. And, well, you know what happened with that one. You may not remember this. It was a candy called AIDS, AYDS. It was a diet candy. And it wasn't good later on when they said, hey, Collin, you look great. I lost weight. How'd you do it? AIDS, not good. So they had to take this off. Yes, new Coke, these wonderful things. So, and also young people are asking now, how do I fit in with ESG? What am I supposed to do? And then I want to get to this notion of investment too. But what am I supposed to do when I see people imploding corporations and names under this ESG, whatever this mechanism is that I can't seem to understand? How do you explain that to people?
Well, I mean, the Anheuser-Busch debacle was, it's one of those things where it's amazing that a company would alienate, the 95% of their base consumer to appeal to maybe a 1 or 2% base. Do you know what I mean? So I think, it's a very odd sort of strategy. And I know that, in marketing, you get people that bring ideas and they go, well, we want to try to capture the full market. But when you have a Clydesdale and an image out there, you need to continue to ride that, that image home. And you're right. They never show beer typically in their ads because, they don't want to show, a bunch of older guys with pot bellies drinking beer. I mean, I don't think that's the sexy sort of ad that anybody wants to see. McDonald's is the same thing. I mean, all the big brands
Yes.
sort of do it.
Yes.
They all
Well, let me
sort of
also
do
throw
it.
one while we're on this subject, and it fascinates me. Disney was, speaking of which, I'm from Florida, and I one time was at a Disney behind the scenes tour, and this one guy who was giving me the tour, he says, "You know what? There's one thing you're not going to see here at Disney. One thing you're not going to see." I said, "Booze? No. One thing." I said, "I don't know what." He says, "Gum. There's no gum. You can't." They hated gum on the floor, gum sticky. I said, I would have never guessed. But what people are hearing, Collin, is people are talking about, for example, things like ESG, human rights campaign, corporate equity indices. People who are being told, and this is, I think, fascinating, who are told, listen, this may tank your stock, but if you expect big companies, BlackRock, to support you, you had better have certain aspects of your corporation aligned with equity and whatever. And I'm seeing it in law firms, and this came about overnight, almost as fast as artificial intelligence. Overnight, we're talking about something which before was kind of like it was an aspirational idea. Now it's a actual function of companies and corporations. So things are just drastically different.
Yeah. And I think in big business, it's, it's one of those aspects where obviously you want to be inclusive, you want to accept, and you want to, and also you have your company goals and strategies that you have to keep moving forward too. So it's a fine line. I think every, business is sort of dealing with this challenge today of how to, incorporate all this and make sure that you're moving the company forward, and also, dealing with, some of the aspects of the change that we're happening in today. So yeah, it's a challenge. It's absolutely a challenge.
Well, let's talk about this challenge. Let's talk about Noble Gold Investments. Your ratings. And by the way, don't take my word for it. Look it up. Your ratings, customer service, integrity. You are the blue chip in the industry. If I am nearing or thinking of retirement or investing, what can you do for me, Collin Plume?
Well, yeah, I mean, and our reviews come because that's what we focus on client satisfaction. That's really the most important thing. Some people, the highest profit is their goal. And especially in the precious metal space, there are companies that are pushing the gamut to percentages and commissions that I think are unlawful. But what we do is we believe, and our team believes, we want to be around for a long time. We want to build a reputation of, helping clients and servicing clients. We get a lot of referrals. So, it's just how our business is built. I'm a family person, and I have kids, and I want to have a business that I'm proud of. A lot of the owners in this space, in the gold space, they won't show their face. They won't come out because of what they're doing. I'm out there.
Shame.
No, they won't. I mean,
and
you look
active
up
warrants out for their arrest, probably extradition.
Yeah, I mean,
orders,
if you look at my
things.
top 10 competitors, most of them will not. You'll never see the owners in that business because of what they're doing. We believe in what we're doing. We sell great product. We sell bullion, coins, and bars. If you're looking to get gold for your first time, we deal with a lot of first-time investors. If you're looking to get some gold in your hands, or silver, or platinum, platinum is very undervalued right now. I think it's a good opportunity to get in. So we can do it in the IRA. You have some IRA funds, or as I mentioned, these old 401ks. People forgot about these accounts. And whether you put that old 401k into gold or not, you want to move that old 401k into a self-directed IRA, because the old 401k will continue to charge pretty hefty fees. And if your employer, if you're not there anymore and the employer's not putting any money in and you're not contributing, you're just going to get whittled away to nothing. You're going to get charged, 401ks charge anywhere from 1% to 3% in terms of fees. So the idea of moving into a self-directed IRA is you're going to get lower fees, and also you're in control of it. So what a lot of our clients do is they'll take the old 401k money, put it into gold and silver, And then when they start that new job, there's typically a 401k there that's going to be in the stock market. So now they have some gold and silver, they have some tangible investments, and then they also have this IRA, which would be in equities and mutual funds. And, both are good. I think being diversified is good. And so that gives them the diversification that I think most people are looking for. And that's why, it's something that I recommend. So anytime you have an old 401k, you typically want to look at what your other options are, and getting into a self-directed vehicle is a better option, just because you have more choices. You can invest in different things, and also you're in control of it. And typically the fees are much lower.
What is one of the biggest misconceptions or myths that you come across that you would like to dispel and disabuse people of once and for all? Anything in particular?
I think that gold is not liquid, silver is not liquid. The bullion coins and bars that we sell are the most liquid assets anywhere in the world.
Define this for those who might not know what that means.
Yeah, so the items, the coins and the bars that we sell, people will buy these in any country, and every country there's a market for physical gold and silver. So I think the myth is that when you get into it, you're in it for a long time. The beauty behind gold and silver is, especially as a retirement, is that, let's say for the last 2 years, the equity markets were down, let's say 30%. Gold had a nice run. Gold was up over the last 2 or 3 years. We were up over 30%, like 32, 33%. So let's say you needed money in the last 2 years, you had the option to sell some of your gold as opposed to maybe selling those equities. Because, obviously the rule of thumb in investing is buy low, sell high. So you don't want to sell the equities when they're down, right? So having that flexibility is really what's important. The other thing with real estate being, I don't want to say illiquid the last 2 years, but I don't think a lot of people really wanted to sell their real estate because they weren't going to get the price that they wanted. Having some gold and silver as a liquid asset is really nice. Also with real estate, it just takes time. You can't unless you want to take a bath and, sell your house for 70% of the value, you can't sell a house in a week. There's those companies online that'll buy it and, take advantage of you, the cash for your house type of places, and they sort of prey on people that either need cash quick or sort of embarrassed by how their house looks. But typically, like gold and silver are an asset that you can move quickly and get in and out of. And so we've had people the last few years that needed money to live on, so they sold their gold and silver, or they started a business. They go out and they go, hey, I want to get in the gig economy. I got a 9-to-5. I'm going to get into something else. So I think that's the biggest misconception, is that it's hard to liquidate these assets. We buy all the stuff we sell, we'll buy it back from you any day quickly. There's an open market for it. So as long as you buy from a dealer like us and you don't get up, a lot of times people first time, they don't know what they're buying. You want to avoid any strange coins or anything that you don't understand. A lot of these companies, they push these polar bears and these Arctic fox coins and all these cockamamie coins.
Filipino Krugerrands.
Krugerrand is, that's the first bullion. That was the first bullion coin. That's people don't buy the Krugerrand much anymore, but you could buy it and that would be fine if you bought that coin. But the bar
Filipino Krugerrands. I made this up one time, but what does that mean? I just made that up. And they said, oh yes, I bought that. I said, I just made that up. But can I just throw something out, which most people, if you've never done this before, remember I'm telling you, most people have said, yeah, gold. You ever felt gold? You ever picked it up? Well, I had a ring. No, there's something magical about looking at coins, or if you get to the bar level, it's really, I don't want to say it's like an alchemy, not an alchemy, wrong term, but it's wonderful. It's like nothing else. Nobody ever says stock. No, it's there's something beautiful about it.
Yeah. And also, you're right. And also, when you retire with your IRA, you can take the gold as your distribution. You're not going to take your stock certificate as your distribution. So that is another thing which a lot of people do, because once you hit 59 and a half years old or older, you can start taking some of your IRA. So a lot of times people will take the coins and bars that they bought from us. And then I think the other question that we get a lot is, how do I know it's safe? And so basically what we've done at Noble Gold is we only offer the storage facility we go to is a segregated storage facility. So which means everyone's gold and silver is held separately. You're not in a big commingled account. And it's all shrink wrap. So basically what they do is when they get your gold and silver, they put it on a table, they take a picture of it and they verify it. They have 2 people do an audit of the gold and silver, make sure it's real and authentic. Then they take a picture of all the gold and silver, and then we send you that photo. Then after that photo happens, they shrink wrap everything and they slide your gold and silver on a shelf. Now, some people that buy a lot of silver, they may have like a pallet, a large, someone that's doing like $500,000 or $1 million in silver. It's a lot. So that pallet will be segregated also. You can't like slide $500,000 of silver onto a shelf. Right. So that's the only thing that's kind of, because you're talking about 500,000 or $1 million, and I've seen like somebody have a few $1 million in silver. I mean, you're talking about, this is like, tremendous amount of silver, but it's all segregated storage at the depository. So, and we do that for a very specific reason, because I want to know that your gold and silver is there. We sent it there, and then you have nothing to worry about. You're getting the metal you bought. And then at retirement, if you want to take it as your distribution, or if you want to buy it back from us, we can handle all that for you.
So if somebody were to call 877-646-5347, telling them that Lionel sent you, which Correct. Is, of course, the magical, that will open up door. Not that you need that, but it couldn't hurt.
Yeah.
It is something that and I'll tell you, Collin, most people, for even sophisticated investors, just are not as familiar. And once it hits you, the genius of this, the reason why it's been around since day one, it makes sense. People will say to themselves, why didn't I do this before?
Yeah.
Why?
Well, it's interesting. A study, it's interesting how trends are changing. So the State Street, the big fund, came out with a study, and actually they realized that this year is the first time it's ever happened. The largest percentage of gold holders in their retirement accounts. Now, these are gold funds and gold mining stocks, so it's a little bit different than what we do, but same thing. The largest percentage of owners of gold were actually millennials. 18% was millennials. And the baby boomers were about 10% of their portfolio. So there's been and State Street, the study, you can look it up online. It's almost like they were shocked that this came out, because they couldn't believe that the millennials are moving. And so it's sort of like the millennial generation, for what everyone said about them, is sort of going old school, right? I mean, they sort of see the value, right? They see the value. And also, they're realizing that this is a good, stable, safe investment long-term. And it's interesting to think, because everybody talks about millennials being aggressive and wanting high returns, but a big part of their portfolio is actually gold, which is a kind of a bread and butter type investment, staple investment. So the millennials actually in their retirement accounts right now are owning more gold than even the baby boomers and the greatest generation. So there's been a definite shift, and we've seen it at Noble Gold. When I started, probably our average buyer was 40 to 45 and maybe older. But the age has actually gotten a lot younger. We're seeing a lot of people in their 20s, leaving a job, rolling over a 401k. So it's definitely shifted a lot. And so I think people are more concerned about downside risk and less concerned about, huge upside. And it's probably a reaction to a lot what's happened in crypto. Probably a lot of those millennials.
I was just going to say it, because that was, FTX, Sam Bankman-Fried. There's no shrink wrap in that. There's no pallets for that.
Sure.
Give us your take on that. What is the outlook? What are people thinking? What should we know about it?
Well, I have a cryptocurrency trading platform called My Digital Money. And, from the start, the most important thing for me was that everyone's clients' assets were safe. So I don't have access to any of my clients' funds or their crypto at all. Everything is held in a trust. Everything is held separate. And it seems like an obvious thing to try to do a business that way, to keep everything separate.
Yeah. Yeah.
Which is, and even with our gold, even when we ship it, it's not held by us. It's held by the depository. We don't hold anybody's assets. So in our crypto platform, My Digital Money, we have a platform. It's easy to trade. It's good for swing traders. So anyone that's done any swing trading this year in crypto has made a fortune. I don't know if anybody's, Bitcoin Cash is up like 140% this year. Ripple is up some crazy percent. I don't even know off the top of my head. But the most important thing is that your funds are not connected to the funds of the client. So he broke the most fundamental rule of a platform or an exchange by commingling funds. And unfortunately, the press and the media got wrapped up in his, charitable kind of, messy hair, driving a Honda Accord persona. And they didn't get into the weeds of the actual what the numbers were and what was happening and what protections. I mean, there's countless interviews with the woman that was running the organization. She's like, yeah, we don't do a lot of math here. Like, what do you mean? You got billions of dollars. You don't have. Yeah. They had no P&Ls. They were running everything. I don't know if you know. They were running on QuickBooks. I mean, we're talking about billions of dollars on QuickBooks. So it's a shame. It's a shame. I feel bad for everybody that got locked into that. I feel bad even now. I mean, there's a lot of, they say there's still some crypto there. None of it's been released back to investors at this point that I know of. So all these people maybe could have taken advantage of all this growth in the crypto market, that's happened in the last few months, and they can't get access to their funds.
We don't have to worry about that, because remember the thing you're saying, I think, Collin, is that it's not crypto that's a problem. It's these individuals. That's like saying if a bank goes under, it's not the money that was a problem. It was the bankster who did that. So just walk me through this. If I call 877-646-5347 and tell them Lionel sent you, or if I go to noblegoldinvestments.com and I say, okay, where do I start? What can you do? What do I do?
Well, the first thing you're going to do is you're going to talk to one of our customer service representatives, and they're just going to ask you questions and find out what level of understanding you have in the precious metals market. And they're going to, send you out some free information based on that, send you out some guides. And you may have questions, you're going to answer questions, but you're going to build a relationship with someone at Noble Gold Investments who loves gold and silver, who owns gold and silver, that understands the markets. And once you understand it and you've had some understanding, it gets easier. But at the beginning, it's a little, it can be overwhelming. There's 10,000 different coins and bars, and you could buy gold, you could buy silver, which, so we're going to just sort of give you a simplistic view of how to get into the market and how to buy precious metals. You're going to ask questions, and, you'll be surprised. The person that you're talking to is going to be friendly. They're not going to be pushy. You're going to make the decision to make a purchase, because we believe the relationships are going to be long-term, and we want people to feel good about when they're making a purchase from us. And so they're just going to learn about the markets. We're going to send you information about the different products. And when you're ready to either do an IRA or buy some gold and silver, you'll contact us, and we'll walk you through that process. If you do an IRA, we have a full team. We do all the paperwork for you. We'll help you contact your custodian. We'll do all that stuff. We have a team that does that. And then once the funds are there, we'll call you, and we'll go through the options, and you'll buy some gold and silver. Pretty straightforward with us.
Well, I hope I love, it's so funny that I am fascinated by this notion of the economy and economics, which is not just P&L sheets, but it's psychology, it's behavior, it's sociology. One of my favorite things to observe are starlings. When they all fly together, these birds, it's called a murmuration, and they all know what to do. And nobody understands exactly where are they going? Why do they do this? Whenever people act in groups, that's kind of what the economy is. That's what money is. It's what fads, trends, things that people do, what's in, what's out. All of a sudden, how people, you mentioned before about Britney about Taylor Swift, by the way, Britney Spears. That's another story. But you hear people in one respect how terrible things are, and you're wondering, where are people getting all this money? How
Right.
does this happen? And you wonder what the next thing is. And I also figure, look at the young people. Old people are great, but what are they thinking? What does their future look like? The zillennials, not what do they think? Where are they going? I find the whole subject absolutely fascinating. I could talk to you forever about it. Just
No,
incredible.
I mean, I think at the end of the day, if you have some money to spend, I think you're going to benefit better from getting from gold and silver than going to a Taylor Swift concert. That's why I can say that pretty much without a doubt.
Going out on a limb.
I'm going out on a limb here. But yeah, anyone that wants to contact us,
Good.
obviously you mentioned the website. Even if you're not ready to make a purchase and you just want to learn, get the information, do your analysis, and check, as you said in the beginning, check us out. Check out our reviews. We have thousands of reviews, actual clients. We want you to spend time reviewing us. So, anything we can do to help. And I appreciate, being on the show today and looking forward to the next one.
Thank you so much. Collin Plume, always a pleasure. Collin Plume, CEO
Thanks,
from
Lionel.
Noble Gold Investments. Thank you so much. We will talk again soon, my friend. Thank you.
Thank you.